All right, let's get right into it. The Federal Reserve just made its first huge interest rate decision of the year, and pretty much everyone is holding their breath. So what on earth does this mean for crypto? Let's break it all down.
So here's the million-dollar question, right? Is this Fed pause a total green light for a new crypto rally? Or is it more like a yellow flag, kind of telling everyone to just slow down? The answer isn't as simple as you might think, and it's absolutely crucial for figuring out what might be coming next.
Okay, first up, the Fed hits pause. Before we even get into how the market reacted, let's just nail down exactly what the Federal Reserve announced at their first major meeting of the year. And there it is. The big headline is that the Fed held interest rates steady, keeping them right in that 3.5% to 3.75% range. So no hike, no cut, just a pause. They're hitting the brakes for a bit.
Now, here's the thing. This decision to pause wasn't a shocker at all. I mean, as you can see, the market had basically already called it, almost perfectly. So the real story wasn't the decision itself, but the commentary, the language that came along with it. And wow, this quote from Fed Chair Jerome Powell really says it all, doesn't it? He basically said, yeah, the economy's doing fine. But then he dropped this warning. Inflation is still an issue. And those future rate cuts everyone wants, well, they're not guaranteed. That single phrase just slammed the brakes on a lot of the market's optimism. So, with that news out in the wild, how did the crypto market, which we all know can be incredibly volatile, actually respond? Well, if you were expecting some serious fireworks, you were probably a little let down. The big hope was that a pause would be this clear risk-on signal, right? The thing that would kick off a massive rally. But the reality? It was way more subdued. We saw some small gains, sure, but the overall feeling was just cautious. A lot of traders just stayed on the sidelines, waiting.
And if we drill down a little bit, you can see Bitcoin got a little bump and Ripple showed some strength too. But other than that, the wider altcoin market was pretty much flat. This was definitely not the broad, explosive move that some people were hoping for. Okay, so this brings us to the really important part. Why was the market so hesitant? Well, the answer is all about reading between the lines of what the Fed said, and maybe even more importantly, what they didn't say. So this is the key difference you have to understand. A rate pause, it's kind of like taking your foot off the brake pedal. It feels good, things stop getting worse, but it's not the same as hitting the gas. A rate cut, on the other hand, that's hitting the gas. That's what actively pumps fresh money into the system, and that's what riskier assets like crypto absolutely love. And this timeline just shows the shift perfectly. Back in 2025, we got 3 rate cuts. That was a huge bullish signal for the market. Now, here in early 2026, we get a pause, which is neutral. And the future? It's just a big question mark. And it's that uncertainty that's making everybody so nervous. And that's the thing. The Fed gave us basically no clear hints on when the next cuts might come. They said they want to see more data first. This lack of a clear roadmap is being seen as a little bit hawkish, meaning they're still leaning towards keeping things tight. And that's what left traders feeling so unsure about everything. All right, so now we have to zoom out for a second because this wasn't just a crypto story. The Fed's decision sent ripples across all global markets. And seeing how other assets reacted really helps us understand the bigger picture and where crypto fits into the whole puzzle. It's actually fascinating when you look across the board. You see this really mixed bag of reactions. Gold, the classic safe asset, it jumped as investors ran for safety. But then you have US tech stocks hitting record highs, showing a huge appetite for risk over there. And crypto? It landed somewhere in the middle, just cautious, waiting for a clearer signal. So, what's the big takeaway from all of this? It's that macro is still king. Crypto does not live in its own little bubble. Its price is deeply, deeply tied to these bigger global trends and just the overall mood of investors when it comes to risk. So, let's boil all of this down into 4 key takeaways. This is the bottom line, what this whole event really means for you. Okay, first, a pause is not a cut. Remember that. It helps, but it doesn't add the fuel that a cut does. Second, Fed guidance is everything right now. What they say next is way more important than what they do today. Third, Bitcoin is holding key support levels, which is a really good sign, but it's not a launch signal. And finally, the rest of the market is just a mixed bag, which totally reflects that cautious mood we've been talking about. And that really leaves us with the final big question to think about. For so long, crypto has just danced to the Fed's tune. Now that the Fed is basically sitting on the sidelines, just waiting and watching,
Does the crypto market have what it takes to find its own reason to move? Or is it just stuck here, waiting for the next signal from the wider world?